Well, earlier we were talking in the news about some of that frost, and Marlon Bowling had mentioned it about the frost in Brazil and what that could mean for that crop. We're going to talk to Ted Seifried about that in just a moment. But first of all, let's go to the futures market provided to us by Bar Chart. In the late part of the session, September corn up 3.5, 561 3/4, and the December up 4 1/4 now at 551 1/2, which still leaves us well, what is that? 7.5 pennies off of the high end of the trade there so far. Now, over in the soybeans, it's August up 3.5 at 13.40 1/4. November's up 1.5 at 13.14. Into the wheat market we go. Chicago wheat comes first here. It's July down 4.5, 641 1/2. Kansas City, July up 1/4 at 618 1/4. But the rest of those contracts are all lower. And July Minneapolis wheat down 20 1/2 now at 822, but well off of the low by 20 cents or so. And then the July cotton up 23, but December is the one that everybody's watching. That's the new crop. It's down 13 points at 87.30. Well, let's go back over here to this corn market and visit with Mr. Ted Seifried with Zaner Ag Hedge about all of this. Ted, what are you hearing about this frost in Brazil? How big of a deal is it? What's the crop like? How can that affect what we're seeing here in the United States?
Yeah, so if this would have been a week earlier, it would have been a bit of a bigger deal. You've got about 20% of their crop reaching maturity right now at this point, which means there is still a fair amount of crop at risk, but it is getting closer to maturity. So if we were to have a frost right now, you're still going to have a crop, but it can still shave yield off a crop that has already been trimmed down very aggressively due to the drought conditions that they've had. So it's a concern. The market has reacted to it. It was part of the reason why we were seeing some very significant strength in the corn yesterday. Corn has tried to go higher here today, but we also have a really big report coming out tomorrow. So I think we're a little reluctant to get too far ahead of ourselves just yet until we see what these numbers say at 11 o'clock Central Time tomorrow.
How important is it that we would get at least a trend line yield here in the United States then, given what we know with the acres, with Brazil, the current fundamentals?
Yeah, so that's the thing. We know that China has bought 11 million metric tons of corn. We know there's demand there for corn. We know that Brazil has been struggling with their crop, and that could be even trimmed a little bit more with the cold temps. What we don't know is acreage, right? Because if we have acreage come in 5 or 6 million above what we saw in intentions, that gives us a much bigger cushion to have a little bit of damage, and if our exports were a little bit stronger. If that acreage isn't as big and it's only maybe 2 million acres higher than what we saw for an intention, well, then that cushion really isn't there. And I think the market has factored in a bigger cushion than that. So that would be a really bullish report. So tomorrow is all about understanding how much of a weather cushion or an increase in export cushion, how much of a cushion we really have for this next marketing year. That's why this report is so paramount and so very important to the market. Also, don't sleep on quarterly grain stocks, because we've seen some pretty massive adjustments to those previous quarterly grain stocks as the USDA has been in this sort of trying to clean house time frame. Mm-hmm. So there could be some surprises there that we're not really expecting. Of course, acreage is going to be the first number we look at. That's the one we're really hanging on. There's so much contention about what this corn crop actually is or how many acres we actually planted. But we might get a surprise in quarterly grain stocks. So tomorrow's going to be a very, very interesting day. And for me, almost more so for soybeans, because that's the one, if you believe the demand is there, which I do, that's the one that could be even tighter of a balance sheet for next year if we don't get a trend line yield. And I know it's really early in the soybean growing season, but wow, it seems rather difficult to think that we're going to get the trend line yield with all the issues that we're having in Minnesota and the Dakotas and parts of Iowa and Nebraska.
That's a good point. All right, stay tuned. We'll be back in just a moment. We'll ask Ted about the livestock next here on the Market Day Report. All right, live cattle market. Let's get started there first. This June live cattle contract up 12 cents now, 122.22. And that's getting us closer to the 122.57 high that we tagged earlier. August is up 20, October's up 10, but December and February are still a little bit lower. Now, feeder cattle market, it's been on two sides of unchanged today, but for the last almost 3 hours now, August feeder cattle up 102 at 157.40. We've been on the higher side here. We've got that far out January down 12 cents. July hogs up 185, August hogs, that's the more important contract, 103.80, it's up 102, October's up 65. Ted, we've had two-sided trade over here in this livestock market today. Why the uncertainty, or is this uncertainty? Is this just drifting?
Yeah, so for live cattle, I'm going to say this is really just drifting. We tried to, after a couple days of weakness, we tried to push it lower again this morning. Couldn't really do that. Now we've kind of bounced back up. I think we're just kind of in the sideways range for cattle for the moment. Longer term, I'd like to see us go higher. That all kind of depends on what cash cattle does, in my opinion, and what packers are willing to pay up. We'll see. The hogs have been the interesting one. We were strong in the morning, then we pulled back, and then we were able to regain that strength. That was a key test of resistance. Pulled off of it, but now we're kind of coming back a little bit. I like the upside potential of hogs. We got a gap up there to fill in the August at 112. Personally, I think there's a lot of fundamental reason to do it. In fact, I don't think there was a whole lot of fundamental reason to slide off the highs as much as we did. But sometimes you need to see technical flush of the market, and I think we've just kind of accomplished that. So we'll see where we go from here. As far as feeder cattle are concerned, I think feeder cattle are just up a bit because corn really isn't. After the big day we had in corn yesterday, we haven't seen a whole lot of follow through today. So feeders are feeling a little bit better about recovering a bit.
Okay, Ted, come back tonight. I want to ask you on the Rural Evening News about what to expect for tomorrow. Sure, appreciate it. We'll see you tonight. All right, over here in the outside markets, the Dow up 22 points. The U.S. dollar, right now, it's up 214 at 92.090. And crude oil up just 3 pennies. Janet, back to you.